Hello traders, Gary Wagner here. 1 o'clock in Honolulu, 6 o'clock in New York on Wednesday, 28th day of February 2024, and this is the evening report for gold and silver. In anticipation of tomorrow's PCE price index report, most financial assets closed nominally higher or lower, waiting to see what the numbers reveal tomorrow. Gold, basis most active April contract, closed up 50 cents, 0.02%, and is currently fixed at $2,043.10. Recently, I have been focusing upon a series of lower highs and higher lows, forming a compression triangle. That was at least up until the 13th of February, when a report resulted in a major drop in gold, breaking below not only the support line but the 100-day moving average. Recently, over the last 2 days, we have small-bodied candles. I am not focusing on the triangle as much, but what I am putting my attention towards are our two key moving averages, the one on the bottom being the interim term 100-day, and the one on the top, that's a dotted green line, being the shorter term 50-day, both simple moving averages. We can see that for the last 7 trading days, it has remained trapped in between these two key and important moving averages. We really need to see a break above or below either the 100 or the 50-day before we can assess with any confidence whether or not we're going to see gold move higher or once again break lower. We do have some indication of the potential to which direction gold will break to, and I draw your attention to the current chart, a daily Henkin Ashi, which shows that we had an absolute pivot in which gold broke quite hard from about 2054 down to these lows at around $1,995. They remained green with the first couple of days having no lower wicks and decent body size, but we have seen body size in this chart type contracting steadily, getting smaller, and now the emergence of both upper and lower wicks, which tells us that the likelihood of the current mild uptrend could in fact have run its course, and the logical assumption from this one technical indicator reveals a higher probability of gold moving lower before moving higher. We've just added Bollinger Bands to the mix. Typically, those unfamiliar with it, you see the upper and lower bands, and what you want to look for is as it hits these lower bands, the likelihood is that it will move higher, in other words, find support. The opposite is true on the upper bands, and we can see how that has bared fruit. We look at this one area where it comes down, touches the lower band. In fact, it moves higher. Here it breaks above the highs of the upper band, and it certainly did indicate a rally and then moved lower. Silver had a fractional gain of 0.30, meaning 3 cents, taking the most active March contract to $22.66.5. The dollar had a gain today, gaining 0.14%, taking the index to 103.905. Silver continues to trade to lower values with a fractional small-bodied candle today, meaning the differential between the open and close created a doji. A doji, after a defined downtrend, which we can identify, can simply mean consolidation, or it can mean a precursor to a pivot, which would be a key reversal to the upside. The caveat to that is I believe that real major support doesn't come in till about $22.18. That is based on these two lows here. We are currently trading at around $22.50 in terms of the low, with silver closing today up slightly at $22.66.5. We will also remain flat in silver.
This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.